How's it going, YouTube? My name is Ari and welcome to Blue Lion Finance, a channel dedicated to investing in my personal journey to amassing $100,000 with my Vanguard brokerage account. Now we're sitting at a brand new record high, that being $78,934.02. That is up by exactly $999 from my last video, all due thanks to the market momentum being sparked by a very strong start to earnings season. And of course, what goes up must come down, which is why I'm expecting volatility in the weeks to come, especially as we enter the month of November with the Fed tapering beginning. But we'll get there when we get there, day by day. Here we go into today's video, in which I want to talk about the one sector that is still brutally beaten down while the rest of the market is rallying. More specifically, 3 big pharma stock opportunities that you can get invested in right now today. Just kick back, relax, collect on those dividends until these stocks once again begin to soar. Of course, before we dive in, make sure you go ahead, tap on that thumbs up button, as it greatly helps me out in growing this channel and getting the word out there. Most importantly, if you haven't already subscribed, go ahead, tap on that subscribe button for me. I not only want each and every one of you along for the ride with me, but want all of you taking advantage of the One Hope Wines $50 gift card giveaway I have underway as we speak, in which one lucky winner, the moment this channel crosses 1,000 subscribers, will be sent that gift card to pick out the wine of their choice. So cheers to that. Now YouTube, with all of that out of the way, let's go ahead and dive right in. So I want to go ahead and kick us off in today's video by talking about what exactly is going on, at least on a macro level overview when it comes to the market, because while the rest of the market is rallying, as I mentioned, there's one sector that is actually beaten down, and more specifically, it comes down to pharmaceutical companies. And by no means in this video am I meant to play Mr. Politician and sharing that I have the solution or the right way for the United States to take the best next steps for our future. That's for all of you to decide. As for me, I want to just remain an investor, speaking to investors looking to make wiser investment decisions for our financial futures. So with that being said, we have the United States accounting for about 4% of the global population, yet 50% of all of biologics, that being things like chemicals and medicine, over the last 20 years have been coming out of the United States. Now we have to ask ourselves why that is, and that is because the climate within the United States, at least when it comes to big pharma, presents an insane incentive opportunities for these companies because of the lack of drug pricing regulations, which all makes sense, right? If there's less regulation on pricing, that means big pharma can come in, create this medicine, sell it on the market for whatever price they so choose, rake in all of that revenue, and then go on to that next drug. But this is all coming at the expense of course, the patients, which is actually a very sad story to tell. However, it brings us right into today, in which now Washington, D.C. is once again talking about how exactly to regulate these pharmaceutical companies and bring those prices down. Now, I don't necessarily think it's going to happen, at least in the near term, but it's always something that we can have on the horizon. And while it is right now in current talks within the Senate, currently considering a bill that will essentially index drug prices and, more importantly, put an end to all these hikes when it comes to pharmaceuticals. Now, most importantly is that Joe Biden's administration wants to be directly involved in the negotiations when it comes to drug prices, which of course all just leads to a ton of uncertainty on what's going to happen in terms of regulation when it comes to pharmaceuticals. Most importantly, investors are now full of fear to invest in these pharmaceutical companies, which is why we see so many incredible sales to get invested on some of these amazing drug manufacturers, 3 of which I'm going to mention today. And I want to go ahead and start off with Gilead Sciences. That's ticker symbol GILD. Gilead Sciences is an American large cap biopharmaceutical company that was founded back in 1987. That's 3 decades worth of incredibly strong growth and of course reliability when it comes to drug manufacturing. Now they have an ever-growing presence on a global scale, currently in 35 countries. Now Gilead Sciences is best known for treating life-threatening diseases, anything from HIV, hepatitis B and C, and cancer treatments. It's worth noting that Gilead Sciences stands behind the #1 most prescribed HIV regimen within the United States, with 3 out of 4 HIV patients on that regimen. So certainly a company that just can't disappear anytime soon and are only bound to continue to produce incredible medicines well into the future. But of course, the proof is in the pudding when it comes to Gilead Sciences, so I don't want you to just take my word for it. They are growing their total product sales by 20 21% year over year, which ultimately translates into very healthy earnings reports. And just taking a look at their numbers back in 2018, we can see they brought in a net revenue of $5.46 billion, into 2019 at $5.39 billion, and into 2020, $123 million, which of course is not as high as years prior, but we have to take a look at what exactly was going on. It was a race to get to vaccines. All these pharmaceutical companies started pouring money into that race, but Gilead Sciences was not at the top. And so there you have it, 2020, 123 million, still a healthy number and nothing to be concerned about, at least in my opinion. Now, just taking a look at its stock share price, we can see that it fell from $73 per share down to 66. That's a 10.6% drop. And that presents a ripe opportunity for the investor to jump in and grab it while it's on sale. Now, until it actually begins to rise again, investors can just collect on that dividend of Gilead Sciences, coming in at a dividend yield of 4.2%. And analysts ultimately have expectations that Gilead Sciences is going to continue to grow, coming in at a median stock share price of $75 per share and a high stock share price of $100 per share. Now, Gilead Sciences has incredibly high value drugs that are on the market and are honestly only going to continue to create moat-worthy drugs. So definitely an investment that I would recommend for all of you to look into. Now, moving right along, we have our second big pharma opportunity coming in from ABBV. That's ticker symbol ABBV. ABBV is a company I've actually spoken about in a handful of my other videos. And of course, right now I've been seeing ABBV being the talk of YouTube. It is an undervalued pharmaceutical opportunity, just like the other two stocks we're talking about here. But when it comes to ABBV, it is just an incredible dividend player within the dividend game. So let's go ahead and dive right in. It was founded back in 2013 after a spinoff from Abbott Laboratories, when this company wanted to go ahead and split it into two, one being a pharmaceutical company, ABBV, and the other being Abbott Laboratories, developing medical products. Now, right when that spinoff happened, ABBV came out with almost this miracle drug that literally took off. That drug being Humira, which was a treatment for arthritis, psoriasis, and Crohn's disease, and ultimately ended up bringing in more revenue than any medicine in the entire world during the year of 2020. However, we're looking ahead to 2023 when Humira's patent runs out, and we foresee biosimilars entering the market, creating a lot of competition, which of course spooked a lot of investors out there. And taking a look at AbbVie's stock share price, we can see that happening as it dropped from $120 per share down to $107 per share. That's about a 12% decline. So major fears when it comes to AbbVie, just because of government regulation on top of that patent running out. However, it's just a ripe opportunity to get invested in an incredibly stable company. And taking a look in years prior at their earnings reports, we can see they brought in $5.69 billion in 2018, $7.88 billion in 2019, and in 2020, $4.62 billion, which is exactly why analysts only expect that AbbVie is going to continue to deliver through on promising drugs, and their expectations show for it, coming in at a median stock share price of $129, a high stock share price of $144, and the best possible news is, as investors invested in high quality companies, we can kick back, relax on AbbVie's dividend with a strong dividend yield at 4.76%, which is exactly what I want to see when I'm getting invested into a dividend company. And last but not least, the third big pharma opportunity is a company I am sure you're all very familiar with. That is Johnson & Johnson, ticker symbol J&J. Now, because I'm sure you're all very familiar with it, I don't want to go far into detail. And of course, I've spoken about Johnson & Johnson in a lot of my videos. I'll keep this one short, sweet, and to the point in sharing with you that J&J has a 135-year rich history worth of developing itself and growing into the world's strongest, largest healthcare company. It has not only survived all that time, but it has certainly thrived. Now, Johnson & Johnson's reliability and stability essentially comes from its diversification when it comes from its segments, that being the medical device segment, pharmaceutical segment, as well as the consumer goods segment. So all around, it has built a beautiful moat around itself. And as a dividend investor, this is the exact type of company that I am personally looking to get invested with. And when it comes to Johnson & Johnson's pharmaceutical lineup in particular, we're talking about 28 products that rake in about $1 billion on an annual basis, all translating to very healthy earnings reports. Just taking a look 3 years back, we can see in 2018 they brought in $15.3 billion, in 2019 $15.12 billion, and in 2020 they brought in $14.71 billion. So just incredible incredible financial strength and a lot of amazing products, just an all-around incredible business to be invested in as a dividend investor. Now, as of right now, that stock share price is down. They fell from $180 per share down to $163 per share. That's about a 10.3% discount for you to get invested into J&J today. Analysts, of course, only have high expectations that J&J is going to continue to grow over time, delivering through on their miracle products, coming in at a median stock share price of $188 per share and a high stock share price of $215 per share. A company you're going to want to have within your portfolio. It is a dividend king. That is a company that has been paying dividends out for over 50 consecutive years and increasing that dividend year over year. And while their dividend is only sitting at 2.63%, what I can share with you is it's worth having that premium Johnson & Johnson name within your portfolio. Very stable, safe, and reliable company to get invested in for the long run. Now that is it, YouTube. The three big pharma stocks I'm sharing with you all today, that being Gilead Sciences, AbbVie, and Johnson & Johnson, are surefire wins for the future. I want you to go ahead, do your due diligence on these stocks if you're looking to get invested in them, because I am not a financial advisor. However, I'd certainly love to hear your opinions, your thoughts. Go ahead, drop those comments below. And of course, if you haven't already, tap on that thumbs up button and help me grow this channel. Most importantly, if you haven't already subscribed, go ahead, tap on that subscribe button while you're at it. YouTube, until the next video, I will see you all there.